Good morning, friends. Welcome to Weekly View on Markets. Wish you all very happy and Merry Christmas. We have seen Nifty falling by more than 2.5%. There was a sharp fall during this week, and Nifty closed below crucial level of 18,000. It closed at 17,806. Bank Nifty also had a sharp cut and closed with a loss of 3%. Closed with a loss of 3.59% and closed at 41,668. Mid-cap index lost heavily, more than 5.79%, closed at 30,157. Small cap index was the major loser, lost about more than 8% and closed below crucial level of 9,500. It closed at 9,182. India VIX, that is a volatility index, fear index of the market, surged by more than 14% and closed at 16.16. There was all around selling in all sectors and small cap, mid cap, and large cap. So there was a panic in the market due to the scare of COVID again with a new variant. Now let us look at different sectors. Except healthcare and pharma, which are supposed to be the beneficiary of any outbreak like pandemic. Otherwise, all other sectors were in red. PSU banks, who rallied a lot in last, have seen the sharpest correction of more than 10.2%. Media stocks lost about 8.99%. Real estate stocks lost about 6.81%. Metals, oil and gas, auto, all lost between 4 to 6%. And all other sectors ended in red with 1 to 3% losses. So there was all around selling during this week, and there was a kind of panic. So now let us look at the chart. What the chart looks like and what the prediction on the chart. This is the daily chart of Nifty. Here we can see market has broken the crucial psychological level of 18,000 and it has closed at 17,806. And my worry is that the fall has been with the increased volume. We can see the volume bars here. So comparing to the earlier days when there was a rise in Nifty, the fall has been with the higher volumes. So this causes a worry for me. And short-term chart structure looks quite weak. So what is the resistance for Nifty? It will be very difficult for Nifty to cross 18,000 now, which is a psychological level. And the Nifty can go up to 16,800 level. That is the bottom which was formed in September. So 16,800 looks like a good support. So if the fear and selling continues in the market for a few more days, the Nifty can very well go up to 16,800 level. That whether that will happen or not in the market, the time will only. Let us look at Nifty mid cap index. This is a daily chart of Nifty mid cap index. The Nifty mid cap index has support at around 30,000 level and it has a now strong resistance at 31,000. So either it will consolidate or we'll see some more correction in mid cap as well. Let us look at small cap index. This is daily chart of Nifty small cap index. Here also we can see a sharp selling, and among all the indices, the small cap index has lost very heavily. During this week, it has corrected more than 8.9%. We can see the big red candle and with a higher volume. So this indicates that the panic reaction may continue for some more time. The market will take time to recover or will consolidate at lower levels. So the support level is at around 8,800 levels, and when Nifty small cap crosses 9,600, then we can see the up move. Till such time, 9,600 remains to be strong resistance for small cap indices. Now let us look at some of the fundamentals of the market. There are some data points to look at from the fundamental perspective. Wholesale price inflation has come at 20 months low. It has come at 5.85 due to fall in the food prices. The food inflation has come down, and that has caused the WPI inflation to come down. Retail inflation has come at 5.9% for the November 2022. So it is good for the economy and the markets that inflation has been steadily coming down. Direct tax collections. Direct tax collections have gone up by 24%. So, and also the refunds have been very quick. Refunds are up by around 67%. So this indicates a tax collection efficiency and as well as the processing of refunds, which is good for the industry. Corporate advance tax for the third quarter is up by 13%, so which is a very good news for the stock market. When companies pay advance tax, their profits are expected to go. We will see the third quarter results coming in after 10th January 2023. So we can expect similar increase in the earnings of companies, which will be around 13 to 15% as indicated by the advance tax that is paid by the companies. In last Fed meeting, interest rates are hiked by 50 BPS points. European Commercial Bank also has raised the interest rate by 50 basis points. It was as per the state expectation. There is one more good news for the Indian economy. Credit Suisse report has come out and it suggests that actual GDP figure for this financial year will be higher than the government estimates. They have studied at the ground level the various consumption patterns, sales of different companies in sectors. So after study with that study, they have estimated that the actual pickup in the economy will be better, and the GDP estimates will be slightly higher than the government estimates. So RBI forex reserves is at 564 US dollars. Crude is hovering at around 83.9. USD INR also is study between 82 and 83. So this shows that on the macro front, the economic indicators are stable and economies seems to be doing well. Industrial output slows down by 4% in October. What is the reason for the slowdown? Both Dashara holidays and Diwali holidays were falling during October, and due to more number of holidays, there is a temporary dip in the industrial output, but not a big cause for worry. The new COVID variant has played heavily on the markets. It has created a panic among the investors and traders who have seen a huge sell-off. But if we look at the informed people, what they are doing, DIIs are the net buyers during the correction. So they are using this correction as an opportunity to buy the stocks. FIIs so far have sold 8,469 crore during December. DIIs have bought 19,096 crore during the December month so far. So there is a institutional buying. So one should not get unduly worried or panic about the correction. This is giving a excellent opportunity for the investors to pick up stocks. So from the valuation perspective, the market is at reasonable valuation at present. Nifty is trading at 21.4 historical PE and 4.18 price to book value. Nifty mid cap is trading at 23.24 historical PE and book value of 2.83, which looks quite attractive for the mid caps. And small cap is trading at a attractive valuation of 15.76 PE historical and a price to book value of 2.80. So on a price to book value basis, both mid caps and small cap look quite attractive at these levels. So investors can looking at buying with a perspective of 1 to 2 years. So they will make good profit. So among all the sectors, I have been recommending that mid cap and small cap, especially small cap, is available at a attractive valuation. But you have to be selective. Look at the fundamentals of the companies, their business growth, return ratios, all these things. And if you pick up good mid and small cap stocks, there is the opportunity to make very good profits. So this is all for this week, friends. So if you like my video, please subscribe to my channel. You can give your comments and questions, which I will reply. And also you can forward the videos links to your friends. We'll meet again next week. Thank you.